Thanks for joining us at xm.com. This is a special report. We'll be having a closer look at the US dollar. I'm Christina Marujas, and joining me today is Rafi Boyajian, lead investment analyst. We're seeing the US dollar suffer lately in an environment of higher inflation expectations in the market, and the Fed arguing that the economy isn't quite out of the woods just yet. And we got a taste of that exactly last week, Rafi, with a disappointing NFP report for April. Therefore, the dollar is caught between what we can sum up essentially as a misalignment of expectations. Is this dollar weakness likely to continue?
Well, Christina, that is one way of putting it, certainly, that we do have a bit of misalignment between what the Fed is saying is going to happen to inflation and what markets think will happen based on what we're seeing now with this surge in inflation. So although inflation expectations have risen quite substantially in recent weeks, nevertheless, nominal yields, 10-year yield, treasury yield at least, has been pretty much moving sideways since late March. And this has been exerting downward pressure on the dollar because real yields have in fact been falling. We did see some steadying in the dollar though, and in yields, the nominal yields at the end of April, early May. But then after that shockingly bad NFP report, things did change a bit. We saw the dollar tumbling, and those doubting that the Fed would stick to its word and not begin tapering anytime soon were given a reality check as the data proved the recovery, at least the labor market recovery, still has a very long way to go despite the recent strength. This week though, markets were spooked by the continued surge in commodity prices, and we saw inflation expectations soar even more. And after that stronger than expected CPI data, we've seen both treasury yields and the dollar firm a fair bit. However, from a technical perspective, the dollar index remains below its ascending trend line, and it could be a struggle for the dollar to gain significantly more traction without a shift in Fed policy.
Now, speaking of the Fed, it has been right so far, but markets aren't convinced that higher inflation isn't on the cards and won't pose an issue. Despite the Fed's adamant stance that it's too soon to talk taper, speculation of the timing is intensifying. What do you think is the likely scenario, and how can the dollar perform moving forward?
So the Fed, even now, they keep insisting that the current surge in inflation will be transitory. So we saw the CPI rise above 4%. That wasn't enough to alarm anyone at the Fed from what we've heard from them so far. So even if investors, though, do now mostly believe that the Fed will stay on hold for a while longer, they're not so sure about inflation remaining tamed and that this rise will be temporary. There's a number of indicators and a number of factors that suggest inflation could in fact prove to be quite sticky. So if inflation pressures do not begin to subside by the end of summer, that could be a sign that inflation is becoming more problematic. And so the timeline has shifted as to when the Fed will begin to taper. Initially, markets were thinking of the June meeting. Now, the most likely scenario is the September policy meeting, or at least at some point in the autumn. We could, though, get some clues before that. Maybe we could get some clues in the summit, the Jackson Hole summit. But regardless of that, it's going to be pretty anxious wait until we get those first tapering clues, and so we're likely to see plenty of volatility in the markets until we get a clearer signal of what's happening with inflation and how soon the Fed will begin to taper.
Rafi, thank you for joining me today. This was a special report. Thanks for watching at xm.com.